Well, while U.S. economic growth staggers, American companies are gearing up to report some strong second quarter results. For more, we're joined by Standard & Poor's senior index analyst Howard Silverblatt. Howard, great to see you back here on the program. Dominic here with me as well. And, we hear so much about how the economy is sluggish and yet corporate profits may be hitting records again. What gives here?
Second quarter looks like it's going to be good. It's ticked down in the last 5-6 weeks, but we're looking for 14.1% over second quarter last year, 5.5% over the first quarter. We look for consumer discretionaries and healthcare both to set an all-time high for earnings. Those highs were set back in Q2 of 2007. Consumer staples, potentially, and materials may be also a high. But even with those new earnings highs and a double-digit overall number, we think the big news and the stock moving situation is going to be in the guidance for Q3 and 4, which at this point still looks a little bit rich to us.
Well, Howard, let's talk a little bit about, guidance is great. Let's say second quarter comes out good in terms of profits here. How much of it, we keep on talking about how much of profits are driven by top line sales growth or revenue growth increases as opposed to cost cutting. Yes, they're making record profits here, but are they actually selling more product or are they just firing more people?
That's one of our concerns at this point in time. The projections not only set a new record for Q3 and 4, but the sales aren't growing that much. Margins, which are already high at about 8.4%, are projected to go up to 9.3% by the fourth quarter. We're not seeing even the sales estimates to go up, yet companies are expected to push more numbers in there. That's one of the reasons that it looks a little bit rich to us, and the other one is obviously on a PE basis. We're about at 13.6, which on a forward PE is low. But yes, the sales we believe are key. Until sales increase, companies won't produce more product, therefore they will not be hiring more employees.
So whose guidance then are you going to be paying more attention to?
We look more at the bottom line, how it's going, but the corporations have not had a lot of Q3 and Q4 guidance over the last month and a half. Basically, they're looking for the actual Q2 to be out there, and they'll make the guidance projections or adjustments if they need to do when they come out with. So that is going to be key on there. Right now, Q3 and Q4 are both expected to be record quarters. The year will be a record. It just appears to be a little bit rich at this point.
But is it tech? Is it manufacturing? I mean, who's going to give you the true picture?
For the actual ones or the projections?
For the projections.
We like tech to look at that because we also use tech as a forward indicator at this point in time. Regardless of which industry or which sector you're in, you need technology to grow your business and increase your sales, obviously. So you need PCs, you need corporate work, you need service. So we look at their back orders the same way maybe 50 years ago we used to look at industrial back orders. So tech is key. It's also the largest sector in the index and the biggest earnings provider, believe it or not. About 17.8% of all earnings come from tech.
Well, Howard, let's talk about, we talk about sectors, technology, financials, obviously the two biggest ones there. You talk about rich valuations right now. Just how much should investors be paying for those earnings that you're talking about right now? The S&P around 14, 15 times earnings. Do you think people are going to want to pay more for those earnings if sales growth is not there to back it up?
We think there's more of a negative potential on this one. Over the last month and a half, 2 months, investors who want to get out of the market have. They've had the opportunity and they've had the reason. So if they're sitting in it now, you're sitting in stocks looking for those earnings. Given that we've got such high projections for Q3 and 4 with a PE again in the 13s on 2011, if we do not get those numbers, there's going to be some disappointment, and that's going to be translated literally into the market. If we get them, we could move up a little, but there's also the potential for going down. Earnings are the main item that's been keeping this market up. The cash flow has been very good. Last year was a record cash flow. Q1 was good. Q2 might be a little bit off. We've got the Bank of Americas and those items which are going to make a variance between cash flow and earnings. And there may be more of them, but right now the earnings are holding up the market. They are holding up the index.
Yeah. Well, yeah, they are. Considering everything else that's been happening with the debt and with what's going on in Greece. Howard, thank you. Appreciate it. Howard Silverblatt of S&P talking about the upcoming earnings season.